On May 20, 2026, Space Exploration Technologies Corp, better known as SpaceX, filed a preliminary Form S-1 with the SEC. That is the moment the company moves from private market mythology into public filing discipline. The headline is not just rockets. The filing packages launch systems, Starlink connectivity, and an AI infrastructure bet into one story. So this read starts with a boring but important rule. Reported facts first, hype second, Mars jokes only after the footnotes. Start with identity. The registrant is Space Exploration Technologies Corp, a Texas corporation with principal offices at 1 Rocket Road in Starbase, Texas. The filing is Form S-1 of the Securities Act, S-2A26936, and the SEC index lists UN-10 documents. The proposed ticker in the local summary is SPCX with NASDAQ and NASDAQ Texas named. But the useful word here is proposed. A filing is not the same thing as a completed public listing. The current stage is publicly filed. The prospectus is preliminary and subject to completion. That means the share count, price range, final proceeds, SEC effectiveness, and first trading date are still not facts to present as settled. This matters because IPO coverage often turns blanks into certainty. We are not doing that. If the document leaves a field open, the video leaves it open too. The first big red is structure. This is not only a launch company S-1, space is still the emotional center of gravity. Falcon Dragon, Starship, and launch infrastructure. Connectivity is Starlink, broadband, enterprise, and mobile service. Then AI enters through XAI Grok X related platform assets and compute infrastructure. Public investors are not being shown one engine. They are being shown a stack, rockets, satellites, and data centers trying to pull in the same direction. Now the numbers. For fiscal 2025, the local S-1 summary reports $18,674 billion of revenue, a $2.589 billion operating loss, and $6.584 billion of adjusted EBITDA. That last number is non-GAAP, so it should not be treated like net income or cash flow. For Q1 2026, reported revenue was $4.684 billion, operating loss was $1.43 billion, and net loss was $4.276 billion. This is scale with drag, not a clean profitability victory lap. Connectivity is why this story is not just ambition with a launch pad. The Starlink segment reports $11.387 billion of 2025 revenue and $4.23 billion of operating income. The same local summary says Starlink had approximately 10.3 million subscribers across 164 countries. That makes connectivity the clearest operating engine in the package. The diligence question is whether subscriber growth, pricing, capacity, regulation, and Starship-enabled satellite deployment keep reinforcing each other. The space segment is still the story people recognize first. It includes launch vehicles, spacecraft systems, Starship, and infrastructure. For 2025, the local summary reports $4.086 billion of space revenue and a $657 million operating loss, with Starship research and development named as a cost driver. That is the trade-off in one scene. SpaceX has launch scale, but the next version of the business still depends on expensive technical execution. Then comes the plot twist. AI, the local summary reports $3.21 billion of AI segment revenue in 2025 and a $6.355 billion operating loss. In Q1 2026, AI revenue was $80.18 million and AI operating loss was $2.469 billion. This is not a small side quest. It changes the diligence frame from launch economics and Starlink alone to compute contracts, model development, X-related assets, affiliated entity complexity, and whether the AI spend can earn its gravity. Governance is not fine print here. Elon Musk is listed as CEO, CTO, and board chair, and the local summary reports approximately 85% voting power through Class B shares. That concentration can control major shareholder votes, including director elections. The risk themes are just as important. Starship execution, launch cadence, large capital needs, regulation, operating losses, national security issues, AI infrastructure, and related party or affiliated entity complexity. Investors are not just buying growth. They are buying a control structure and a risk stack. So here is the filing read. SpaceX is not simply asking public investors to look at rockets. It is presenting a platform built from launch systems, Starlink connectivity, and AI infrastructure. The known facts are already big $18.674 billion of 2025 revenue, a profitable connectivity segment on an operating basis, and a preliminary S-1 with a public market path beginning to form. The open blanks are just as important. Effectiveness, pricing, share count, proceeds, trading date dilution, and the next amendment. Admire the engineering, read the risk factors, and do not confuse a countdown clock with completed SEC math. Thanks for watching.